Well, let's stick with business a bit longer because Madison Reedy is in the studio beside me. Hi, Madison.
Hi.
What a story this is. Facebook has had the largest ever single-day stock drop in the history of Wall Street.
It was a Wall Street wipeout.
It was. What does it mean for the company? What does it mean for shareholders, and why did it happen?
Well, there's actually a lot more to it than the headline suggests, and it is a pretty bad headline. And there was also a lot focusing on Mark Zuckerberg, obviously the founder and CEO of Facebook as well. There was a lot focusing on his wealth drop. So he dropped in the Forbes rich list today. I'm sure he didn't get too much sleep overnight. So they dropped about 20% in their shares, and that obviously just wiped out. It was about US 119 billion off their market value. But the reason for that, the reason that investors started pulling from the Nasdaq, from its shareholding on the Nasdaq, which is the tech-heavy stock on Wall Street, is because Facebook isn't actually losing money, is the shocking thing. But they put out a warning saying that with all of these privacy issues that have happened, we can expect that our revenue isn't going to grow as quickly, still growing, but not as quickly as it has for the past, decade or whatever. And so people just got a bit wary and pulled their money from it. So they are still growing their monthly active users and their daily active users. So obviously, as I'm sure you know, that they make money off people's information, which they sell to advertisers. They still made US $13 billion in booked advertising revenue in the past 3 months. So they're certainly not doing too badly at all. But yes, people are worried about the rise in subscription growth. But they still had, people are still signing up to Facebook, and they've had a major amount of growth, particularly in some Asian markets. So the Philippines, India and Indonesia, that's kind of their big growth market at the moment. And they also own, don't forget, Instagram and WhatsApp, and those are major growth areas as well. Most people that use these types of platforms use them on apps, so they have a pretty good position still.
Extraordinary story. Liquor makers have sent a wish list to Parliament. I don't know anything about this, Madison. What is it and what do they want?
They want export growth. So these are the smaller distillers. So they're the ones that, make your home brew, like your gin, your whiskey, your vodka and tequila and all the rest. So there's about, the association bot who kind of oversees all of them, he turned up to the Foreign Affairs, Defence and Trade Select Committee yesterday. And he said, look, there's about 60 of us. Only about 10 to 15 of us at the moment are exporting, but we reckon we can all do it. And he thinks that within a decade, if they can all do that, they would create an export value of about 50 to 100 million within a decade, which is a lot of money to New Zealand's economy. And what they told the select committee was that they wanted to form a group called the Distilled Spirits Aotearoa, and they want to work with the New Zealand Trade and Enterprise, but they did have that little wish list in there as well. So they said that they didn't necessarily say we want this, but they flagged their very high excise tax as something that was in the way. So they pay about $52 per litre of pure alcohol, which is about double what wine and beer makers have to pay.
Right. Thanks, Madison. What happened on the markets today to end the week?
We had a bit of a last-minute Friday night surge, actually, as I was watching. So the NZX Top 50 index closed up 0.7% or 64 points to close at 8996. The New Zealand dollar's buying at 67.8 US cents, 91.8 Australian and 51.7 to the British pence.
Madison Reedy, thank you very much. Have a fantastic weekend, Madison.
You too.